Do you want to hear how over 30,000 businesses, including mine, are simplifying workflows, collaborating better with their clients and staff, and boosting productivity? They use SmartVault's cloud-based document management system and client portal. Built for accounting professionals like me, SmartVault is the easiest and most secure way to gather, store, share, and e-sign documents in the cloud. You can batch, print, and distribute tax organizers, statements, returns to clients, and quickly send them a list of requested information on exactly what you need right through SmartVault. SmartVault also integrates with apps like Pro Series, Lacert, QuickBooks, and many more to streamline your administrative tasks so you can save time and focus on what's important now, which is your client work. SmartVault has been key in my starting lineup, and I know you'll appreciate how much it can power your business too. Check out smartvault.com to get started. Hey everybody, welcome back to the DM Disruption, where we are here just to motivate you and educate you on all things accounting, right? On accounting firm, running an accounting firm, so important. Making sure we have the right tools in place in order to successfully help our clients. And today, I am here with Paul Hamann of RC Reports, which has been an absolute game changer for Powerful Accounting because we've moved into relationship pricing and we are advising our clients in a different way than we ever have before. And it's changed my life and changed the course and direction of my clients and their companies. And that's what's mostly important to me. So, Paul, thank you so much for coming today. I always love to have conversations with you. How are things going?
They're going really well, Dawn. Thank you for having me. I look forward to these conversations as well. We cover a lot of information, but we just seem to have just a whole lot of fun along the way.
Absolutely. And I love that you're at the beach today. So that's great. And, not too many people walking around. So that's good. I'm in my office today because, it's post-tax season, Paul. And we want to talk a little bit about that and what happened, like what was different than any other year, right? And every year is different. I mean, it has to be. We're not doing this. We're not the same robots every year. We learn new things and we realize new things. And for me, your education, which has been around for years, I've just apparently been in a cave somewhere because you've educated me all about reasonable compensation. You've even spent some one-on-one time going through case scenarios with myself and Randy Crabtree and kind of really digging deep. Have you had a lot of, what are the conversations you're having with practitioners right now?
So a lot of it is, well, part of it's post-mortem, which kind of has that negative connotation, but the other part of it comes from that those conversations or that reflecting back through tax season is optimism and opportunity. So I'll kind of give you the both sides of that coin. But if you are incorporating reasonable compensation into your tax planning and your tax prep season, what likely occurred to you as you were going through that process is you may have had some of the clients that are a little bit more difficult or resistant to taking your advice on reasonable comp or difficult on making the change occur to you. And those are more conversations you should have right now, but some of those clients may end up not being clients next year. They may have to be rehomed to a better fit for a different practice. But from the flip side of that coin, which is the fun part, going through those clients, those that embraced your advice, because when you start talking about reasonable compensation, other things come up, other conversations, and then your other pass-through entities that aren't S Corps, your Schedule Cs, LLCs, et cetera, and making notes of those and coming back to that now that we're post-tax season and getting in touch with them and saying, hey, look, let's take a look at whether it makes sense for you or not to maybe look to moving to an S Corp, right? Because we can get that foundational work of a reasonable comp report done and then do the rest of the analysis and let's see if it benefits you.
Yeah, and I think that is something that I definitely behaved differently as I was evaluating tax returns that I was doing and saying, hey, wait a minute, are you a good fit for an S corporation? Or if you already are an S corporation, what you were paying yourself, was it reasonable? So think about clients that may not be, like I was saying before, in this relationship pricing model, that were maybe somebody we didn't even approach to be part of that. Now we're saying, wait a minute, you are an S corporation. Your profit at the end of the year was $300,000 and you paid yourself 50 grand. That's already a flag to me that that's not reasonable, because really at the end of the day, and I think people in the past have thought of reasonable compensation of, well, 60-70% of their profit. Then we can save them that other 30-40% in self-employment tax. And that's been what we call the grand guesstimator of,
Yes.
I don't know. So let's just use a percentage, because at least we're using numbers. That should be reasonable. And then through the education from you, Paul, where it's like, that's not going to cut it in the event of an audit, right? And so, it's funny because you get some clients where you do the reasonable comp, they're like, well, I don't want to pay myself that much. I'm like, I understand that, but then you need to maybe reevaluate these questions. I don't want to lead you to say, well, we can shift this and move that there. I want to make sure that I can take that signed paper, hand it to the IRS and go, we're good, because we actually analyze this for real, right? So looking at this past tax season, now saying, oh, those clients, here's an opportunity for them to become part of the relationship pricing model, because we have some compliance matters. And one of the things that we are the best at, we are the best at leading with compliance. We're the best at that because it's an easy sell. Scare the crap out of them, they're going to pay you, right?
Yep.
Where if we lead with advisory, we're like, listen, this is something we have to do, but at the same time, what are your company goals? What are your personal financial goals? Maybe it's not just reasonable comp, but now maybe we want to factor in a 401k plan. There's that, it brings you down other conversations, which I think a lot of practitioners are struggling starting that conversation. So, I think you would agree that this is a great way to start that conversation.
Oh, absolutely. I think, and again, I know I'm biased, but I still think this is the best icebreaker there is with
I agree.
small businesses, because correct me if I'm wrong, Don, here, but we all like our salary. We all like to make money.
Yep.
So talking about money and talking about the money that's coming to you, right? That's part of the reasonable compensation conversation. And so that's why it's so foundational to all the discussions. And it's just a fantastic icebreaker.
It really is. And so, again, if you're listening and you didn't necessarily have that mindset of, oh, I should be analyzing reasonable comp, or yeah, what about my Schedule Cs? Should I be looking at that? And whatever, it's never too late. That's the great part about it, is that it's not too late to, at this point in time, now take a look back. It's okay to take a look back, but do you want to, and I think really it's all about mindset. We all know that. Everything is mindset. It's all between our ears, period. It's not something that we know we can't do. We know we can do it. It's a matter of changing that decision, because you don't want to end up a year from now and the next year goes by and the next year goes by and you haven't done anything about it. And, we're so prone to be reactive as opposed to be proactive. And this is an area you do not want to be a reactive person, because you get how much trouble. It can cost you a lot of money in the event that you get audited, a client gets audited.
Oh, absolutely. Yeah. When we're talking with Dawn, we're talking about being proactive, right? That's absolutely where you want to be. Reactive, that's a whole nother conversation.
Yep.
And that's the Eric Greens of the world.
That's where you're calling Eric.
Yeah.
911 Eric Green.
Yep, that is absolutely the George Jetson retro George scenario, and that's what we want to try and keep from happening with proactive firms and relationship pricing. Absolutely, get them in compliance. Everybody sleeps better.
Absolutely, and I think this whole servicing the thousands, servicing many, doing some things, and now moving to serving less but doing more for them. It's like a responsibility of ours, in my opinion. Some people want to be that. I want to do 1,000 tax returns and then I want to take the rest of the year off. That's good unless you have people who are S Corps, and unless you have people that are Schedule Cs and you're not doing anything for those people the rest of the year. That's where you can fall into trouble. And then it's a disservice to the client at the end of the day. So shifting gears a little, because this is exciting. So there's some exciting things happening at RC Reports. One of them that I'm more than excited about is the ESP, Entity Selection Planning, because there really hasn't been, that I've ever found, a tool to help us actually calculate, if you stay a Schedule C, this is what's going to happen. This is what your costs will be. If we elect you as an S corporation based on variables such as net income, what's great about it, you have the information right from the past tax return. You pull a Schedule C,
You do.
put the net income into the tool, put in what you've done. So you've done a reasonable comp analysis for the client as well. And so you've done the reasonable comps. You're going to put that in there with the taxes and all these other things that are come along with costs that are associated with moving to an S Corp. You're now going to do a separate tax return, blah, blah, blah. And hey, client, here's a report to tell you over the next, I think it's 10 years. Was it 10 years?
Yes, 10
Yeah.
years.
Over the next 10 years, what you're going to save by moving to an S corporation. And I've had these conversations everybody's had these conversations, and I'm like, well, it's going to cost you, $22.50 for the S Corp return, payroll fees around $1,500, set you up, it's about this. So it's going to cost you all of this part, an attorney to do the setup of the entity. But over time, you're going to save $180,000. Pretty sure the 10 grand up front, you're not mad about.
Especially
Right?
when the 10 grand up front in the first year is still a savings for them. Absolutely.
Exactly.
I mean, it's a no-brainer decision.
Right. Right. So, so tell us a little bit about the tool. Like, why did it come about? What was your thoughts behind it? Like, tell us the history of what, I mean, I'm freaking pumped about the tool. I'm just going to say,
Yeah,
but
absolutely. So when I first got into reasonable comp, it was mainly a compliance issue, and it was also the bad kind, right? The
sure.
reactive kind. But what I realized is being proactive with reasonable comp and compliance is great. We want to keep our clients out of trouble. We've talked about all that,
Sure.
but we build fun into our firm at RC Reports. It's part of our everyday ways of working with one another. We try to have a little fun with our website and our clients when we can. And I think the most fun conversation around reasonable compensation with your clients is entity planning. Look what look at this. Look what we can do for you. So
Right.
we started building, a much simpler tool than the one that's up now years ago. And it just did a quick 1 year look, and it didn't really give you much of a deliverable or anything like that. But it did say, hey, will I save or not save some money if I move? And just like our other products, we've been building on that. And so earlier this year, we released a much more robust, much more updated version of that. And it's super cool because you're having this talk with your client. Now you can say, hey, look, this is where we are this year, but look 10 years out. Look at the money that's going to be in your pocket, not somebody else's.
Exactly. And look, there is a deliverable. So it's not just, oh, here's a calculation and let me take a screenshot of it and I can at least show them whatever. It's an actual report that you're able to show to them and have that conversation. So you've got your reasonable comp report, you've got your entity selection planning deliverable, you've got these things that are something that's showing them, when you show them, here's another little twist to it. When you're able to show somebody who's been paying themselves on distributions, they don't have a W-2. Okay.
Right.
Now there's a lot of reasons why people want a W-2. You're going to buy a house, you're going to buy a car, you're going to get financing. It's really hokey with a Schedule C. It's really tough to get those banks to commit. And usually you're paying higher interest rates because they still have this sense of, they don't have this the sense of comfort that a W-2 gives them.
Yes, absolutely.
Which is funny, right? And you must hear stories about that.
Oh yeah, for sure. There's always that balance, right? I don't want to show I'm making any money when I'm paying taxes, but I want to show I'm making a ton of money when I'm borrowing money.
Absolutely.
Right?
People are funny about that, right? You hear that all the time.
Yeah, absolutely. So a W-2 just kind of puts you in the same perspective or viewpoint when you are talking about a car loan or other things, because it is it's just seen much more, right?
Yeah.
Most people aren't self-employed. Most people are employed. And
Right.
so therefore the W-2. And so as soon as you kind of step out of that norm, it's a little harder for them to evaluate you. And sometimes that costs you a little bit in the terms that you're able to get.
Right. And it's not, I don't ever look at that as a reason to move someone to an S corporation because, oh, they want to be on a W-2 so they can buy a car. Nah, that's not what it's meant to do. or what it's meant to be for. Because really, at the end of the day, if their company is small and they're profiting $50,000-$60,000 and they're happy with that, moving them to an S Corp is because they're not going to be able to pay a reasonable salary at that point. That's part of the problem, Paul. So when
Yeah.
people are talking to you and asking you, listen, I got this client, I want to move them to an S Corp, and they profit 100 grand, but the reasonable comp analysis is telling me 125. What do you tell people?
So the first thing I'll ask them is, hey, look, if you don't mind, can we just jump on a quick call and let's take a look at the reasonable comp analysis? Make sure it's accurate. Make sure we don't have any ego built into that number.
Yes, that's one of the big
Um,
struggles.
but if it turns out it's accurate, right? We have a very competent advisor here. It is 125,000. I would still do an ESP report for that person, but I would show them that it doesn't make sense for them to move right now, because that's also valuable information, right?
Yeah.
Hey, my buddy told me I should be an S Corp. I'll save on money, right? I can't. The number of times I've heard that is incalculable. But being able to show them why they're not quite ready, but you can also project out and say, but in 3 years, based on what we know today, you'll be ready in 3 years. Let's wait 3 years. We'll do another look next year, another year after that. But as soon as it makes sense for us to move you to an S Corp, we will, because we can do this analysis. So it's also important to be able to tell your clients that are coming to you saying, I need to be an S Corp. I'm going to save on taxes. I read it in a blog. I saw it on TikTok. My best friend told me.
Oh, and most of the time that's where the information comes from, which makes us insane.
Yes.
And, they're telling you that with their whole scenario, but you don't know their whole scenario. You just know that they're an S Corp and it saves them money, but you don't know their real numbers. Of course, although the buddy will tell them how amazing they're doing and how much money they're making and paint this beautiful scenario of wonderful happiness and peace and love, when really that may not be the story. And so, and I always tell my clients, I'm like, listen, the numbers don't lie. The facts are the facts. 1 + 1 is 2. We are not weathermen. We're not economists. We are factual, documented numbers that make sense. And so, and so we hear those. And so I want you to tell the story, because I don't remember word for word and whatever, but the story that you told me about Eric Green, and where he had this practitioner come in and he got audited and it just blew up into what, $130,000 in penalties or something. Can you tell that story? Because I don't know how many people have heard that story.
Absolutely. And again, it's Eric Green's story, so I will paraphrase the best I can. But man, he can deliver it so much better than I can.
Well, I don't know. Give it a shot. We'll have him evaluate.
Yeah. So reasonable comp. If your client gets hit with a reasonable comp challenge, one of the things the IRS can and has done is assess a paid preparer penalty, and they're right around $5,000, which is the ceiling for those. So we've seen a few of those, but they're always kind of one-time $5,000 penalties. Talking with Eric Green, this is very, very recent. This is sometime in the last 12, 24 months.
Yep.
He has a practitioner that's been doing this, as he said, forever, which I take to be 30 to 40 years.
Yeah, right.
Never had an issue. And he brought it up with his clients, though, regularly. He was trying to be responsible. Hey, guys, you're taking, and this is the case, and this is why it was also so severe. They weren't taking any reasonable comp, right? They were definitely gaming the system. Zero reasonable comp, all distributions.
Yep.
No, you got to do this. He sent them letters. He sent them emails warning them, trying to CYA.
Yeah.
That actually bit him in the butt, unfortunately, because it demonstrated that he did know about the problem and still signed off on the returns.
Yes, and that's terrifying.
It is. It is. So anyway, long story short, the IRS comes in. We call this, no pun intended with COVID, folks, but we were using this term before COVID. Reasonable comp challenges are contagious.
Yeah.
So they came into this guy's firm, saw this happening with one guy, said, didn't pay reasonable comp. Here's his new number. Here's what he owes, which is about 2.5 times the actual tax that would be owed. That's just a rule of thumb, right? So that's a lot of money. And he goes, hey, tax preparer, $5,000 to you. You signed off of this and you knew better. Oh, look, he didn't do it last year either. Boom. Here's the second assessment. Here's your another $5,000. There's 10 grand, right? Oh, look at your book of business. Here's 12 others. Boom. And that's how you get to $130,000. 13 clients, 10 grand a piece, and $30,000. And now he's also fighting to keep his CPA license. That's a whole nother can of worms.
It is. And I think, and why I wanted you to tell that story is because there are people out there who are still struggling with moving to relationship pricing and or subscription pricing, as Ron Baker would put it.
Mhm.
And I understand that people are struggling with that, and we're going as fast as we can to put some courses together to help people get over that hump and how to implement it, how to price it, how to do all these things. But in the meantime, this is even if you treated it as a one-off project for now, till you're comfortable with wrapping this into a monthly subscription. For now, at least, grab a hold of and just start with your existing S Corps. That's what I say. Start with them first, because the people that are Schedule Cs are not in trouble yet. Like, they're fine. Let's leave yep, they pay an extra tax, but whatever. Start with those that you need to start CYAing. And I'm of the mindset of, if you guys aren't willing to pay for me to do this analysis for you and you're an S Corp or a C corporation, then it's probably, like you said in the beginning, it's probably time for you to move to another practitioner who may not be as paranoid as I am, or may not care about following the rules the way I do. Not saying that's good or bad on that person, but that's their risk they're willing to take.
Mhm.
And so accepting the fact that you may lose a couple people, you may not. We didn't lose anybody over the conversation of reasonable compensation, not one person. I'm like, listen, we should have been doing this for all these years. We didn't. We need to start now. Let's start this analysis. And then once you get used to doing it for those existing S corporations, then you can move on to the other Schedule Cs and say, hey, now let's do our ESP, our entity selection planning, figuring out if you're capable, because you've got to be prepared to do the reasonable compensation analysis when you're doing that entity selection process, right, Paul? I mean, I think that would be the best practice, right?
Oh yeah, absolutely. Right. We all want to make sure that we're safe first and foremost, and that is mitigating risk. So you've got your book of S Corp clients in compliance
Right, right,
for the year, and now we're going to go help some folks, and we're going to help them save some money on their employment taxes,
right.
and having that discussion. And when you're on subscription pricing, the other thing that is terrific is that you can have this touch point a couple of times a year. So I personally like talking about reasonable comp toward the end of the year. So we're also, so end of the year, we're verifying we did the right amount for the year in case things changed. We're also set up for the next year,
Absolutely.
right? Then post tax time, we're touching base again. Hey, look, June, July, May, even as early. Hey, let's just take a quick update on this. Has anything changed this year? We did one at the end of the year, last October, November, December. Anything different right now?
And you're actually doing the report again. So
Yes.
you're delivering a signed off, yes, we talked about this. And I love it because it comes with the meeting minutes that you need, right? So you have all of that set. You can even save a template because I know yours is a sample. Obviously, check with your attorney
Yes.
this is not legal advice, blah, 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 like disclaimer. But have those meeting minutes ready so that you can, it's almost like rinse and repeat. Again, always check in with your attorney, make sure that that's all being done the right way. Getting the client to sign the report, everybody. They need to sign the report and acknowledge that they're in agreement. And then, this is even crazier, the payroll has to then be adjusted in their payroll system. Now, you'll love this one, Paul. So I have a client, it's right here. His pile is right here. This is his pile. He is under regular audit for the third time.
Wow.
For the third time, he's an S corporation. The reason why this came up was what I said about getting it into the payroll system. So this guy elects as an S corporation, and the tax preparer says to him, the one who I guess advised him to become an S corp, said you should be taking salary. And that's where the conversation ended. You should be taking salary. Now let's just even put aside reasonable compensation. Let's not even bring that into the fold yet. So this guy's operating as an S corporation, not taking any payroll, no compensation, only distributions. This is his third audit because he's still not taking any salary as an S corporation. So, so when I had this initial call with him, I'm like, what do you mean? He's like, I said, well, how do you do payroll? What is your payroll provider? He goes, well, I have employees. So we use QuickBooks Payroll because it's right within our system. He uses desktop. I'm like, okay, so here's what I want you to do. I want you to go into your payroll and I want you to add yourself. Now you know how to do payroll because you have employees. Add yourself to payroll and start paying yourself. I said, we're going to get through the audit and then we'll talk about reasonable compensation after we get through this reactive scenario. And once we're done with the reactive scenario, we're going to move into a proactive scenario and we're going to do a reasonable comp analysis. Because Paul, at the end of the day, looking at his tax return, I don't know if he even should be an S corporation based on his net profit. But now with the entity selection planning tool, I'm going to be able to show him.
Yeah, absolutely. And those scenarios come up, right? Somebody is we talk sometimes about how you might have to rehome a client because they're not a good fit for you. But keep in mind, there are clients out there with people that are churning out tax returns that want more. They're not a good fit for those people, and they're going to find you.
Exactly.
Right. So you could very well have somebody come to you and say, look, I'm an S Corp, but I only have net profits of $65,000 a year. Right. It's still small. It's still growing. I've been an S Corp for 3 or 4 years. You run that analysis, it may show that they shouldn't really be one at this point in time.
And we actually, it's interesting too, because we just did that. So because again, last fall, when I was really getting heavy into reasonable comp, we have 2 S corporations that this year filed final returns. One of them had no profit. The other one was irresponsible with payroll. Like he was irresponsible in that we use ADP for all of our payroll, and he was like, didn't have enough funds in the account to pay the payroll because he was irresponsible. And so I said to him, I said, that's it. I'm done dealing with your irresponsibility. Mom's not letting you be an S Corp anymore because you're not responsible enough to be one. And that's, I think, important, right?
Yeah. Yeah, absolutely. And you're also saving them money. Again, you're taking them a different direction, but if they shouldn't be an S Corp yet, then let's save them some money. Let's help them be a better business person, grow their business, and then they can always come back and reelect if they want to.
Exactly. And I think that that's such a really good point too, when you're talking about the relationship pricing model. And like this one S Corp that we've been working with, this is her last year as an S corporation. So we have her in a smaller pricing model because we're doing her bookkeeping and we're doing her S Corp return. Now, because after 2023, she won't have had an S Corp filing, her fees are going to change where she's only going to have a personal return. And so she's somebody who we're going to actually take her out of relationship pricing. We're going to refer her out for bookkeeping, and we're just going to do her individual return. And so that whole relationship is going to change because it's what's best for them. We're an expensive bookkeeping service mostly because we don't want to do it. So,
yep.
in that case, you're going to pay more. And we're very open and upfront with our clients to say, we're going to put you in this relationship pricing. It's going to include your bookkeeping and include all these other things that we're doing for you, which always are reasonable comp is part of that conversation, depending on their entity. And I love what you said, Paul, about clients that are with people who aren't providing the service they want and that they want more. And the statistics show people do want more from their accountants. The accountants are so spread so thin and reactive because of compliance and things like that. That's where the mindset can shift. And if people can start to embrace that, we're going to be better for the client. And for those that just want to churn returns, I'll give you them. You can have them. Merry Christmas, whatever. And we have an S Corp that we moved into relationship pricing. He does his own bookkeeping, but he always has questions. He has questions here and there. What should I do about this? Where does this go? And he wasn't getting answers from his previous bookkeeping consulting firm. Mm-hmm. I said, tell you what, Todd, We get you into relationship pricing. We're going to do a reasonable comp analysis because you're an S corporation, which we needed to do anyway. We're going to do answer any of your questions you have on accounting. We're going to do all these other things, and it's going to be $1,500 a month. And he was previously paying us like $2,250 for the tax return. Now this guy's at 18 grand a year. And you know what he said to me? He goes, Dawn, the fact that you guys answer me right away, you get back to me. If you don't know the answer, you find out, and then you get back to me. You know, I've always wanted to know. This was one of the most amazing comments from a client. I always wanted to know if I was paying myself what I should be paying myself. That's what he
Yes, I've
said
heard
to
that
me.
too. I've heard that a number of times too.
Right? And you
Yeah.
just, that's, if you can mind shift yourself into realizing what these clients, they want it. And you know what? If they don't, they'll tell you.
Mhm.
And that's
Yeah.
okay too.
Yeah, absolutely. When you run the reasonable comp report, most small business owners don't have enough hours in the day. Not saying all, but most of them don't. And when they do the analysis and they see that they're spending 5 hours a week on bookkeeping, and they're like, huh, Dawn can do that for me. And over here, those 5 hours turn into $5,000 a week because
Exactly.
I'm doing something else in my business, probably whatever, that business is main function is, but whatever it is, they've also just increased their bottom line by 60 grand.
Yeah. And I love that you said that, because the other piece of it that people sometimes don't realize, if you're not having a relationship with your clients, that you're having regular conversations, and I mean regular could be 4 times a year, is more than they're probably getting from you now.
Hmm?
Having conversations 4 times a year, this is an amazing question. What are your goals? What are your business goals? What do you want? And that was what we did with our first. We're like, what do you guys want to do? You want to add more trucks and more guys? No, we don't. We want to grow the oil delivery service because that's a lot easier to maintain, blah, blah, blah. And so then I was like, oh, wow, I didn't even think of that. I didn't even know that's what you want to do because I never asked before. So if I'm saving someone 5 hours of bookkeeping a week, that business owner may say, you know what? I'd like to go to my daughter's soccer games.
Yeah.
I'm going to take that 5 hours and I'm going to carve it out for my family. Or I want to golf once a week. So I'm going to take every Friday, I'm going to do 9 holes on a Friday. If you're not asking your business owners what they want, how are you going to get them where they need to go or where they want to go? And this, like you said in the beginning, this is an easy icebreaker. This is easy to talk about.
Absolutely, because it talks about all the hats they're wearing. So you can have a conversation about payroll because it's likely in there if they're doing their own.
Right. Yep. Most of the time they are.
Yeah.
So, I mean, so at the end of the day, Paul, if you know, to leave our listeners with what would you leave them with as a post-tax season, what to do next, what should be, and then I'll show you here, as I always promote this right here, which is what's important now. What's important now for our listeners on this conversation that they need to be paying attention to?
For me, it's I would just say finding the right fit. And what I mean by that is if your clients have found the right fit with you, they're going to take your advice and they're going to be these ideal clients and you're going to sleep well at night and they're not going to keep you up. And the clients that keep you up at night are going to be a great fit someplace else because they're going to find a firm that will work with them the way that they want to work with. So it's all finding that fit and having that icebreaker conversation. Run through a cost approach report with them. Great icebreaker. So many different topics will come up in that conversation. You'll bring you closer to your clients, and you may find out that with that 5 hours, playing soccer to them is so much more, or seeing their kids play soccer is so much more valuable than whatever else they could be doing to make money during that time.
Absolutely. Yeah. So hopefully people are starting to really shift their mindset, but not just shift the mindset, people. You got to do something about it. You know, you talk about love languages, right? And
Yes.
my love language is do it. Don't talk about it to me. Show me and do it. And that shows me that you have that intention. You're really ready to make a change. So, we'll definitely see people upcoming at conferences and around wherever. We've got Dawn's Dugout has been launched. So the first Monday of every month. We're talking about all these kind of conversations. Ask your questions, talk together. The next one will be June 12th because I'll be at Engage for the first Monday of June. So it'll be June 12th, and then the first Monday of the month thereafter. Of course, there may be adjustments, but love to see everyone and anyone come to that. If you want to ask more questions about regional comp, you want to learn more about RC reports, come to Dawn's Dugout. We'll talk about it, help you in whatever way we possibly can. Paul, thank you so much for coming today and having a conversation with me. It's always my pleasure when you're coming to have a conversation with me. Love it.
I love it. I love coming on, Dawn. Thanks for having me.
You bet. All right, everybody. Thank you so much. We'll see you next time on the DM Disruption. Everyone have a great day. Change your mindset and then do something about it. Talk to y'all soon.